Okay, we are streaming live, and we can get this meeting going in another minute. Please remember to mute yourself unless you're speaking.
Good afternoon, everyone. This is the Committee on Administration meeting for the Board of Supervisors, County of Dunn. We are going to take roll call at this time. If you would just answer by saying here. Mr. Tim Lenal.
Here.
Thank you, Tim. Mr. John Calabrese.
Here.
Supervisor Sheila Story.
Here.
Supervisor James Tripp is excused. Chairman Dave Bartlett.
Here.
Thank you. We have a quorum along with our county board members. We also have a number of staff here today. And we also are going to hear from April Anderson later today, who is here from Clifton Larson Allen. Next item on our agenda today is approval of the minutes. Our last meeting of this committee was June 25th, 2020. Do I have a motion?
So moved.
Tim moves. Do I have a second? Dave seconds. Any questions, comments, or changes that need to be made to the previous minutes? Okay, hearing none. All those in favor of the approval of the 25th meeting minutes, please say aye.
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 Any opposed? Hearing none, that passes. Next, we're going to move on. We have staff reports. Are there anything from our staff members who are present that they would like to add to their reports? And Mr. Miller would like to start out.
Just for the record, we have staff reports, monthly reports from the county manager, from the chief financial officer, from our human resources director, from our county clerk's office, from our county treasurer, from our IT division, our chief information officer, and just a moment. And that is it.
Thank you. And again, are there any comments or questions concerning those written reports? Okay.
Wait, we have Sarah Benedict has raised her hand.
Sarah?
Thank you. So I unfortunately did not submit a written report, but I just wanted to relay that it's business as usual as far as COVID precautions are concerned. So courts are up and running. Staff are largely working remote. We completed a couple of grant reports for second quarter. So we're looking forward to those reimbursements, but mainly business as usual under these circumstances. Thank you.
Thank you very much, Sarah. Anything else?
I have a question, Mr. Chair.
Supervisor Calabrese, go ahead.
Yeah, and I think it's probably just a typo, but on the from the county clerk's report on page 11 of the packet, it says absentee ballots. In the second paragraph, it says absentee ballots are currently being issued. And I think They didn't need to be huge, but I just wanted to make sure.
Well, I do believe that absentee ballots have been issues, but thank you for the correction.
Appreciate that. Thank you, John. And make note that I would make an assumption at this point that should be issued.
Yes.
Anything else in terms of the reports? Okay, if not, we have some action items. 5A on our agenda is review and recommendations of items for the 2021 legislative agenda. There is a printout of that in your packet. Has anyone looked for any additions, deletions, or anything that you need to change? If so, Mr. Miller has one that he is going to present to us.
First and foremost, for the purposes of the meeting, we have a person who's called in from a number ending 6561. Could you identify yourself, please?
It's Doris.
Ah, okay. Doris Meyer, thank you. I'm going to put your name in there. Doris Meyer is the county treasurer. Okay. Moving on then to the legislative agenda. By way of background, as most of you know, every year Dunn County puts forth a legislative agenda consisting of items, legislative items we would like our elected representatives at the state level to advocate on our behalf. Either elimination of laws, changes to laws, or adoption of new laws that represent things that we are concerned about. We ask every year the department heads, the managers, to put forth any items that they want. And we also ask the standing committees to do the same. We collate all those. They're put together in front of the executive committee and ultimately adopted by the full county board in November of each year. And then the following January or February, we try to have a special meeting of the county board where we elect where we invite the elected officials to sit down with us. We present the legislative agenda and give them a chance to react to the items contained thereon. So what you have in your packet besides the staff report is the legislative agenda for 2020 that was adopted at the end of 2019. And in taking a look at that, two things that are immediate changes. Item 1A under judicial was support for Dunn County receiving an additional judgeship position. That will obviously be dropped because that position has been granted after many years of asking for it. The second thing that would be a change from the 2020 came out of the executive committee meeting yesterday. The executive committee had been approached by a resident who wanted the county to advocate to change the way the funding for technical colleges are done, based on the notion that the trustees for the technical colleges are not elected officials, and yet they have control over tax monies. So they wanted us to advocate for changing that so that it would be elected officials, or at least, or perhaps alternatively, they wouldn't have the tax authority that they have technical colleges. It was agreed at executive that that should be on the legislative agenda. So we'll add that for discussion as well. The opportunity is for this committee, the Committee on Administration, to review what was done, what's included on our 2020 legislative agenda, strike anything, add anything, or amend anything. And if you hopefully have had a chance to look this over, if you have not and ideas occur to you subsequently, you can of course contact me or anybody on staff and see about having it potentially added. That concludes my introductory statements.
Mr. Chairman?
Please,
Don?
Yes, Supervisor Lino, go ahead.
Yeah, there would be one little addition that I would like to see on the Dunn County legislative agenda. On number 2F, support state grant program for disposal of deer carcasses. Since Dunn County is one of the newest hotspots in the state of Wisconsin for CWD, I'd like to maybe put a little notation on that as to also disposal of deer carcasses and testing if possible for CWD.
Okay. I don't know why we couldn't have that. That sounds like a good idea, Tim.
All right. Just thought I should throw it out there.
Thank you. I've made note.
Okay. Anything else from any of the board members on the committee here that would, any deletions, additions? Otherwise, like, as Mr. Miller said, make sure you review it, and you can always pass this on to the staff. You can pass it on to Chairman Bartlett or to Mr. Miller himself, and we'll make sure that those things are considered.
The same is the case for the department heads that are attending this meeting as well.
All right. Our next item is consideration of audit of our vouchers, and our vouchers for this period go from 6/18 to 7/15/2020. They total $934,981.11. I have a motion from anyone as far as passing the vouchers.
So moved, Tim Lenow.
Okay, Supervisor Leonow makes the motion.
Second, Sheila
Second.
Story.
Seconded by Supervisor Sheila Story. Any comments or questions, deletions or additions? Chairman Bartlett.
I just want to call attention to the rec park water bill and make sure that this last bill was included in what the hockey association is going to be paying. That someone should follow up with Scott to make sure that that the last month's bills or whatever end up getting included in that.
I have made a note of that. Thank you.
Thank you.
Anything else from anyone in terms of changes or questions about the vouchers? Okay, hearing none. Let's vote to approve the vouchers. All those in favor, please signify by saying aye.
Aye.
Aye. Any opposed? Hearing none, the vouchers are approved as presented. Next is consideration reports, resolutions, and ordinances that we plan to forward to the county board from this committee. And the first item here is going to be for the year 2019, an audit report. And April, are you ready with that for us?
Yes, I am.
Okay, this is April Anderson from Clifton Larson Allen. Go ahead, April.
Okay, sounds good. Thank you. I think you all should have received a copy of the executive audit summary, or it's a preliminary draft of parts of the executive audit summary. And so that is what I'm going to focus on this afternoon. And so it's a high level of the final audit report isn't issued, but it will be in the next week. And this is kind of high level information from that full audit report as far as what we see as key pieces of information for you to know as governance. And so I'll just kind of go along my way. I won't hit on everything even in this report, but let me know if you have any questions as I do go. So starting on the very first page within, it says audit findings and results. And so this is just a high level summary of the results of the audit. And you'll see in the second paragraph, that's the audit opinion. And so we issue an opinion on all financial statements issued. And we issued what's known as an unmodified opinion, or we will be issuing an unmodified opinion on your financial statements. And what that means is that it's a clean opinion or the highest opinion that you can receive. So it means your financials are in accordance with generally accepted accounting principles, and with all the GASB standards, the governmental accounting standards that are out there for you to follow. And so obviously that's what you're striving to receive, and you hope that your financials are in accordance accordingly. The third paragraph there mentions internal controls. So as we go through the audit, we are not only reporting on the financial statements, but we also need to report on any issues we find in internal controls. And here you'll see that we are reporting 3 different deficiencies or weaknesses in your internal controls. And these are what you have seen in the past. So these are very common ones. We report these most of the time for basically all the governmental entities, or most of them that we work with in Northwest Wisconsin, due to the size and makeup and structure of the governmental entity. And so, as I said, they're common, you've seen them before, and there's no new findings this year. They're repeat ones. So the very first 2 are material weaknesses. And the first one is for your financial statements. So again, I already mentioned that your financials are in accordance with generally accepted accounting principles. Governance and management are truly responsible for them, but you look to us to help draft them. And so, and that, as I said, that's very common. I'm sure lots of your staff say that they wouldn't have the time to get into the ins and outs of every GASB standard and principle that there is out there. So you look to us to help provide that expertise and specialization. The second one is material audit adjustments, which is similar as far as we propose certain audit adjustments as we go through the numbers and make sure that they're in accordance with the accounting principles and standards. Because your stuff is your transactions are properly recorded, they're within the system, but obviously there's accrual and certain accounting complexities that are out there to follow. Then the second section is significant deficiencies. So this is considered a little less severe than material weaknesses. And here you'll see the limited segregation of duties. And so what this means is that in the different financial reporting processes, disbursements, payroll, receipting, journal entries, one person shouldn't necessarily have access to each part of that process, the initiating the transaction, reconciling it, reporting it. And so again, that's kind of hard sometimes in the makeup and size of an entity to be able to segregate those completely, those different parts of the process. And so the key here is obviously to, even though you might not be able to segregate your duties completely, to make sure that you're looking at your processes and where controls can be put into place to mitigate the circumstance and any risk of error occurring. You know, that is the key here, is to continue. It's a continual assessment of your process and processes and how you can make them better. And then the next section that we see there is compliance. So as part of the audit, there's not only the financial piece of it, but due to the federal and state funding that you receive, we also need to make sure that you're in compliance with grant regulations and rules. And we don't test all grants, but the ones that we do test, we have not noted anything to report at this point in time. So, and that will be issued a little bit later, the single audit report and that final report. And then the other items that you see here are just some additional items that we've noted, and these have been recurring for the last few years just due to certain circumstances, as far as it kind of stemmed first from the new ERP system or your SAP system and transitions there, and looking for our assistance to help a little bit more in some of the final reconciling processes for the year. And now this year, just as far as what has gone on, some transitions in staffing, COVID, and your staff needing to maybe put their attention and time to other things, we will still be reporting it this year. But I do foresee these two comments as far as receivable listings and reconciliations and the payable listings and reconciliations to be removed eventually, once everything kind of lines up and all the ducks are in the row there. So Any questions at this point in time on kind of the high level overview and results? Otherwise, we'll jump into some of the numbers then specifically. Okay, so we will go to the next page 2. And here we start off with the general fund. And you'll see here we show 4 years of activity, just to give you a little bit of a historical perspective and how things have changed. I won't go over every line on here, but just hit on some of them that may have changed significantly over the last few years or that might stick out. So here in the general fund, we start off with the assets, and the big item here to note, you'll see that your cash and investments balance did decrease in the general fund. And you'll also see, though, a couple lines down, the due from other funds increased quite a bit. And so these two kind of correlate as far as other fund activities needed some cash flow to help support them. And so the general fund kind of interfund loaned them the cash. And so in that $12 million due from other funds, that includes $8 million, 8.3 to NDC, as far as their negative cash balance. The human services at the end of the year has 1.4 million negative cash balance. And that is a function of timing of your expenditures being incurred in 2019, the cash going out in 2019, but there's always a lag in the grants that you receive to offset those expenditures. And then there's also this year, newer, or one you haven't seen, is that the highway fund actually had a cash deficit. And we'll get into the details of the highway fund a little bit later, but that was 2.1 million. So that is what why your cash balance in the general fund went down a bit, and that due from other funds increased. So then we're going to go down to that fund balance section that you see there. And this is kind of where the meat of the results and where the general fund stands. And what the fund balance is the net of your assets less your liabilities. So kind of what you really do have available in the general fund. And you'll see that in the current year, your general fund change in fund balance actually increased 2.3 million. And so that was positive results, especially since I believe there were some budgeted deficits that were out there. So, and there was a few different things that made that result. Your sales tax was received was higher than normal. Your shared revenue was a little bit higher than budgeted. And then just some expenditures came in under budget. And in addition, human services, which we'll see a little bit later, but the county policy is to zero out that fund balance. And then the last few years, the general fund has had to transfer funds to the human service fund. Human service actually ended up with a positive fund balance in 2019. And so $900,000 was transferred back to the general fund. So that obviously increased the change in fund balance there too. So what we look at in that fund balance number is that your overall fund balance is the 18.3 million, but there are different categories in that fund balance. So the non-spendable category, which is at 9.1 million, is made up of some of those long-term kind of advances or due from other funds. So that cash that you've already used for NDC mostly is kind of the long-term one that's not readily available in the near future. And then some other things that are in non-spendable includes delinquent taxes that aren't currently available. So you don't know when you'll get those in. So that's why it's considered non-spendable at this point in time. And then there's assignments at the end of 2019 of 835,000. And that includes the carryover balances. So amounts that you've identified to set aside for particular purposes. And that does also include any budget deficits going into the next year. So again, you've identified the funding sort or use already to be used for a specific purpose. So ultimately, that gets you down to your unassigned fund balance of that 8.3 million, which is quite similar to where your unassigned fund balance was last year. And what we look at there is that unassigned fund balance to your annual expenditures. What we generally recommend as a percentage of that comparison is about 25 to 33%. And most of the counties we work with in Northwest Wisconsin average about 30 to 40%. And you'll see that your percentage there is 38.6%, very, very similar to what you saw last year as well. So you're at a pretty steady level there, a very comfortable level as far as having funds available for those expenditures that may arise that you're not able to budget or plan for, but you have some funding available for those circumstances.
Okay, we're good
Are there any questions on the general fund before we move on to other?
then.
Okay, so we'll go to item number 2, which is then your special revenue funds. And these are basically considered self-sustaining funds where you can break out particular operations or activities, and the expenses that you have hopefully will be recovered by certain grants or charges for services and that type of thing going back into those funds. Here, while we're showing it or reporting is the ending fund balance for each year. And so as I already mentioned, your policy for the county is to zero out the human services fund balance. And so you'll see that that's zero all 4 years. But what I did allude to earlier is that there was actually a positive revenues exceeded expenditures in the current year for human services by the 900,000. So positive results, especially since the last 3 years, there were negative or expenditures exceeded revenues by 750,000 last year, and 500,000 the year before. So obviously a good turnaround and results there. And then you'll see in the other few funds as far as where things have gone there. I know solid waste is a little bit of a hot topic there, and you will see that that fund balance has gone down over the last few years, which is a result of a couple years ago. A bit of that was due to some bigger capital expenditures, I believe, in there. And then the last year, this year, it was kind of just a result of your expenditures exceeding the operational revenues for that service and activity. Any questions on those funds? So then we'll move to the next page and item number 3. And here is your debt service fund. And so generally speaking, the debt service fund is used to levy or transfer sources in for paying your principal and interest on debt. And usually it does run about a zero balance because you're only putting in there what you need to pay your principal and interest. You'll see that you have had a little balance the last few years, and that's due to premiums that you've earned when debt has been issued. So you have a little bit of a balance there to be used to pay for future principal and interest payments if need be. And in the current year, or in 2019, 2.6 million was paid for principal on debt, and 1,084,000 was paid on interest for the year. So again, that came in through tax levy or was covered by tax levy and paid out of there. The next fund that's reported is the Capital Projects Fund. And here again, it's just kind of the ending fund balance. You don't really see the ins and the outs. Obviously, in 2019, you did issue $8 million into that fund in debt. And then you had the renovation and capital projects there. So, so that was mostly spent all in 2019. There are some follow-up or final expenditures that will play into 2020. And then we move into item number 5, which is they're considered your enterprise funds, or they work a little bit more like a business as far as your revenues, and these funds are usually charges for services. to provide the services. And here we start out with the highway fund, and we see a little bit more detail as far as the balance sheet and then the ending net position. And I did allude to a little bit of how it ended up for 2019 for the highway department, and you'll see that cash balance at the end of the year was 0. And then your current liabilities increased due to that interfund loan from the general fund. And so we go towards the bottom of this section, and you'll see that the change in net position for the general fund was 3.3 million deficit negative. So that means your expenditures for highway exceeded your revenues by that amount. And so there were multiple factors. I believe, first of all, that you actually budgeted or expected a 1.5 deficit or use of fund balance anyway. So that was expected. And then just some other circumstances that occurred. There was higher maintenance and overlay costs. And then if anybody thinks back to last winter, which you probably don't want to, but it was a very harsh winter. So some increased winter maintenance costs as well added to that. So that was where you ended up for the highway fund. And what we look at here as sort of a benchmark is that current ratio at the very bottom. And that's your current assets to your current liabilities. And you would like to have at least a 1-to-1 ratio. So that means available cash and current assets like that to pay for your current payables. And you'll see that at the end of 2019, that did get down below that 1-to-1 ratio that we would like to see. And that's obviously a little bit of the factor of the cash deficit that you see there. Any questions on that, or we will continue to move along?
I guess I have a question on that. I'm not quite. So what you're saying is the highway department went over budget last year.
And it was expected that they were going to use to balance their budget. They were going to use 1.5 million of
Correct.
available funds that have built up in that fund. Yes.
Right. So how is the current liabilities ended up being 2.6 million? I mean, they didn't. How much over budget were they, or what? I don't quite understand this, I guess.
Well, and those are somewhat two different factors. So the current liabilities piece of it and why that increased is more of the cash flow side of it and liquidity as far as what they had available in cash. So obviously, the overall change is a combination not only of what you actually have in cash, but also receivables and payables and that sort of thing. And so the current liabilities increased significantly because their spending was more than the cash that they actually had available at 12/31/19. The other side of it then is that as far as your actual expenditures and revenues that were recorded in the highway department fund for 2019 were much higher. The expenditures were much higher than the revenues. And that is a function of, first of all, it was expected that your expenditures were going to be higher than your revenues, which a part of that is that if you look at the taxes receivable line, you've decreased that tax levy for this particular purpose in the highway fund over the last few years. So they were getting less in the revenue side for taxes, but then they still had equal expenditures or maybe even higher expenditures. And in the end, we do know that they had even higher expenditures as far as maintenance costs and road overlay and that sort of thing. Did that answer your question?
No, I guess not. I'm still puzzled over the liabilities. So, so who is the money owed to?
Well, let me get back to that. 2.1 million is owed to the general fund. So it's just within the county. It's just somewhat of an allocation of the cash that's there. So your true payables out to vendors and that sort of thing are pretty consistent really with prior years. It's
Okay.
about 500,000. So again, it's just that, and so the cash balance is a factor of maybe taxes receivable, other receivables that, you know, at the end of the year, you're still owed amounts from the state for certain things as far as maintenance costs that were incurred in October, November, December, but you don't receive that funding in. So hopefully when that is all said and done, you know, you receive that funding in, and that will bring your cash balance back up and take away that interfund loan that the general fund is covering right now.
So they have quite a bit outstanding that of revenues that's coming back in. I mean, over $1 million, you're saying?
Yeah, I mean, the taxes receivable was 3.8 million, and then your accounts receivable and was 700,000. So obviously, that doesn't mean that will be your cash balance next year, because obviously you'll have expenditures and that sort of thing going into it. But yes, hopefully then that will be the case, and it'll be something that $1 million worth of debt was issued into this fund. So it'll just be a continual thing that you'll have to look at as far as if the tax levy can or should be increased, or if you need to maybe not do certain infrastructure overlays and that sort of thing.
Is that $1 million that we put in there, is that part of that liability?
No, not at all. That you will see down towards the bottom. It says transfer in.
Right.
And so that was that debt issued and put here to the highway fund to offset some of those expenditures that you had. And Keith, I don't know if there's anything else that you wanted to add there as far as.
Thank you. Yeah, just briefly, because we don't want to drag this on too long, but certainly want to provide the best information possible. I do want to point out that part of that net result were, Chairman Bartlett, you were asking, you know, were they over budget? Yeah, April did point out some of those areas that were from the winter maintenance and so on. We also had a significant revenue shortfall. If you recall, the ferry pit sale came in
I do.
a couple $100,000 less than budgeted.
Right. But you know that we're talking 2.1 million. So that's, I'm surprised it added up to that much. I guess I'd like to know where the rest of it came from. You know, that's what I'm trying to get my hands on. And maybe you can help me out with that in the future. But you know, that's my question.
Sure. Highway Commissioner
see the detail of that.
Has put together, can put together a list for us. We had a conversation in advance of this meeting when the financials are pulled together. And yes, April hit on the main points, but certainly we can pull that together for you and for the committee.
Okay, thank you.
Just for my purposes, Chairman Bartlett, are you looking for a breakdown of what constitutes the current liabilities?
I guess so. You know, it went from, I understand there's always a certain amount in there, and I understand it's going to range maybe from a little under $1 million down to 400,000 or 500,000, whatever, every year, depending on what's going on. But, you know, the winter maintenance, the ferry pit, I just can't remember that would have even totaled $1 million. So I guess I just would like the breakdown of where that came from.
We'll try to get that for you.
Thank you. And I'm sure everybody else would like is interested too. You know, I saw Tim kind of nodding. So
yeah.
Okay, well, thank you for that question, and then there'll be follow-up on that. We will move on then to the neighbors. And here I generally don't get into too much detail as far as the results, or again, the details, because I did attend a committee meeting back in June for them, and we went over things pretty thoroughly. I guess the bottom line there, you'll see the change in net position was negative 1.4 million. And so that means the expenditures exceeded revenues by that much. During that committee meeting, I did have a breakdown as far as what that consisted of. And for the true operations for 2019, it was actually positive results of about $200,000 of revenues exceeding expenditures. But then this change in that position also factors in the depreciation expense on the assets, the interest expense that you have that you're paying on the bonds outstanding. And so, so again, operationally, it was a positive result of 200,000, but just those other factors in there as far as your other expenses that relate to that particular operation of the county. And then the third enterprise fund that you have is the Transit Commission. And here we'll, a little bit of the detail of the balance sheet, but we'll just head down to the bottom part there where you'll see the change in net position. It was a positive $45,000 there. So the last couple of years it's been negative or deficit results. And so that was a positive turnaround to see the revenues exceed the expenditures there. And looking at that current ratio again, as far as current assets to liabilities, that's above that goal of 1-to-1 there. And so
Yes.
then we,
I guess I would have one question for that also. On the second one up from the net change there, transfer in capital contributed. Where is that transferred in from?
the transfer piece of that was about 100,000 for the elderly transportation activity. And so that actually comes into human services, and then
So
human
that's a grant
services
then that comes in.
Yeah,
Okay.
exactly.
Thank
And
you.
then the other portion of that, the 95, about 95,000, I think it was, is actual capital grant that you received for a bus purchase during the year.
Okay, thank you.
Mhm. And then on the last page, we get into the internal service funds, which is your workers' comp and the health insurance, self-insurance funds. And here, just kind of like to get to that change in that position number. And the workers' comp, the last year you had negative results there, but that turned around this year where it was $143,000 positive. For the health insurance fund, you saw a higher claims year, and so that was negative 1.395 million there. And so something that you'll have to continue to monitor as far as the rates in there, and making sure that the amounts coming in cover those costs that you see going out of there, because the last few years now have been negative results there.
And if I may interrupt just enough to say, we can anticipate for the budget for 21 that there will yet again be changes to the premiums and the split between the county contributions, employee contributions, as we continue to track our health insurance costs.
Okay, very good. Thank you for that. And so then the last thing we pull together in this summary is the long-term obligations that you have outstanding. And here you'll see the 38 million of GO debt outstanding, and that does include the neighbors portion as well, plus the 8 million that you issued in 2019. And what you see at the very bottom there is every county, municipality, school district in the state has a debt limit, which is 5% of the equalized value within the county. And so the 38 million that you have outstanding in debt is about 23% of what your overall debt limit is. In the counties that we work with, we generally see 0 to 20% range there. So you're a little bit over what we see, but nothing concerning there in what you've utilized of your debt limit. So, and then the last piece is that if we move back up a little bit, the vested comp, abs, and other post-employment benefits, this is estimated liabilities that the county has for what your employees have earned at this point in time for sick, vacation, comp, leave. And so that will be paid out into the future when they take it. And again, that's estimated as far as what they've earned at 12/31/19. So again, that's generally the high-level overview that we go over. Are there any final questions or comments by anyone?
I have one question. Is there anything in the audit that is that would lead you to believe that there is a suggestion that we could do better?
And when you say better, I guess, obviously there's many different components of activities that you have at the county. And so I don't know if you're looking operationally as far as, you know, like the highway, or if you're thinking kind of transactionally within how things are done in the finance.
I'm just looking, is there anything obviously that we're missing here that that other counties are doing that we're not?
Nothing that is very like sticks out to me
Okay, all
as
right.
far as being way out of the norm or anything like that. And the things that I did hit on as far as the self-insurance, health insurance fund, obviously you're looking at that and have taken steps to adjust to that and answer and provide a response to what you're seeing there. So that's obviously a good reaction to what's happening and what you need to do to continue that fund and the results that you want to see from that activity. But otherwise, no, there's nothing like really that sticks out to me as far as, well, what's going on here and why are they doing that? So.
Well, you have a unique perspective, and so that's why I ask.
Yeah, I understand, and that's what is great about how we specialize and work with so many counties, and that we can offer, and especially in the governmental realm. I mean, maybe there is competitive, but you don't have like competitive advantages and that sort of thing that you see with private businesses. So it is something where we can usually share, best practices and that sort of thing. So.
All right, thank you.
Okay, anything else in terms of questions for April? If not, April, thank you for a very well-presented report and all your time you've taken to answer the questions that we had. And I think, I guess my feeling is I think you're doing a great job for us. So thank you.
Thank you. And we'll see you guys next week then for the board meeting.
Thank you. Looking
Thank
forward
you.
to that.
We need a motion to forward the audit report to the county board.
Okay.
Supervisor Story moves.
Supervisor Story moves. Thank you. And a second by Mr. Lino.
Yes.
Okay, and seconded by Tim, Supervisor Lino. Any other comments or questions at this point? Hearing none. All in favor, please say aye.
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 Aye. Any opposed at this point? Hearing none, motion passes. We will forward the audit report onto the county board next week. The agenda, we're down to item 7, which is announcements. Our next meeting date for this committee will be April 27th of 2020.
August?
Or August, I'm sorry. Oh,
Ooh.
there's a dyslexic read of a month.
Well, that'd be a nice long break.
That would be a nice long break. How about August 27th of 2020 at 3:30 PM in the afternoon. Anything else in terms of announcements? Okay, hearing none, our meeting is adjourned. Thank you all for participating, and again, thank you to April for a job well done.
Thank you.
Thank you.
Stay
Goodbye.
healthy.
Yeah.
Good evening, everyone.
Okay, Krista, can you make sure that we've stopped our live feed, please?